Hope your week's off to a good start. I told you if we broke above this 3.48 level, it would not be good. And we would run up to this 3.68 level, a level we've not touched since 2011, 11 years ago. And we are rapidly getting there. We're at about 3.6 now. I don't know what the Fed's going to say tomorrow. Clearly, the market is pricing in the worst thing they can imagine at this point. We fell below the downward channel. We fell below the point of no return since I believe it was 09. So again, I hate to be dramatic here, but it's just a really terrible picture. We're now at 97.16, down another 38. And I wouldn't expect much of a turnaround tomorrow. It's possible the Fed maybe is not as bearish as the market is priced in, and we get a little bit of a pop. We're absolutely due for a bounce. I just don't know when it's coming, guys. Uncharted waters, ugly, ugly time.
It is another rough morning for mortgage-backed securities. They're down 45 basis points, the 10-year breaking above 3.5%. I know, makes you just want to look at it and go, ugh. So, hey, listen, hang in there. It is quite possible that we are approaching, with tomorrow's Fed meeting, maybe a change in direction in bond prices and yields. It is quite possible. Let's look back to June 15th, and we knew that prices were getting ugly, similar to the ranges we're at here, but we did get some benefit after that Fed meeting. Let's hope that we do see a similar pattern. Maybe traders are anticipating that as we go into this, maybe things reverse a little bit today going into tomorrow. Okay, supply and demand, really important basics for any kind of price discovery. The more demand and less supply, prices go up, and vice versa. So when we take a look at the construction area, this is where we get our supply from. We did get a report today on new construction and home completions and home building. But before we examine those numbers, I want to talk to you about supply. So how much do we need? We need an amount to satisfy new households being formed. So we measure household formations. And then to give you an example of a household formation is, imagine a family and they live in one dwelling, and someone grows up and wants to move out and get their own place. So now that same family, instead of occupying one dwelling, occupies two. They've formed a household. Could be where a couple living together decides to split up. Instead of one dwelling, one person remains behind, the other person moves out. So instead of one, they're moving in, they live now in two. They have formed an additional household. So these are household formations. And let's see where we are in the United States right now. So currently, we are forming, the latest data shows 1.77 million households. But here's 1.8, here's 1.6. And if you take a look, we've kind of been averaging somewhere in here, on the higher end, it could go above it. On the lower end, it could go below it. But you could say that if we took a number of around 1.7, it's a reasonable guess. You want to go a little lower than that, a little higher than that, whatever. But I think it's a reasonable guess. So that's the demand side. So is there balance in supply? Well, where do you get supply from? You get supply from builders providing new homes, new construction. And as we take a look at that, we got the report today on housing starts and permits. So we're putting up 1.6 million units on an annualized basis. As mentioned, we need a little bit more than that, closer to 1.7, but it doesn't tell the whole story because this is a hole in the ground. You cannot move into this yet. This eventually would get built, but these are not completed. In addition to that, about 100,000 units a year get destroyed, rebuilt, retired from aging. If you look at actual completions that you can move into, it's a little more than 1.3 million units. So deduct the 100,000 from there for those that get retired or rebuilt. And you're looking at an area of somewhere around 1.2 to 1.3 million units. That's real supply, but real demand is closer to 1.7. Now, the higher rates are keeping people on the sidelines for sure. But the point being here is that rates are going to come back down. And we don't know how far they'll come back down. But as you've heard from us, we think that towards the end of this year, first quarter of next year, very realistic, you see them back under 5, and that'll drive some more demand. But the supply just isn't there. And if you look to the future, permits, that's not enough either. So we do see tight conditions persisting in the housing market because there appears to be more demand than supply. And historically, That's pretty supportive of prices.
Zillow just changed their 12-month home appreciation outlook. Last month, they were estimating that homes were going to appreciate at a rate of 2.4% for the next 12 months. They have now dropped that this month to 1.2%. Now, here's the thing. This is nationwide. Some markets will appreciate more. Some may even see a slight loss. But the bottom line in this report is we're not seeing signs of a housing crash.
And tomorrow also is Fed Day, and we'll hear from them at 2 p.m. It's going to be a 75 basis point hike, but the Fed's comments at the press conference can be market moving, so we're going to have to watch that closely.
That's where we're going to get the vacillations and gyrations. Hold on to your seatbelts. There's going to be a lot of head fakes, I'm sure, and a lot of market moves, but it also could be a good thing for us tomorrow. At least we're keeping our fingers crossed on that one. All right, team. Let's bring up the markets here, and mortgage bonds. They have improved. They're down 33 basis points, if you want to call that an improvement. It was worse than that, folks. They are searching for a bottom here. The downtrend, they've kind of fallen out of bed here in September. And the 10-year, that's up 10 points. Probably is worth it, at least, to wait until tomorrow, because we could see a reversal. There is some hope that there's exhaustion of the downtrend. We are dramatically oversold. And we are ripe for a reversal. All we need is a little cooperation from the Fed tomorrow. So we're going to hold tight, weather the storm in hopes that the Fed meeting tomorrow could be a signal that things start to improve. Have a great one.